Morning and welcome to Retire by Investing. This is RC with another comprehensive market review. And today we'll be starting with the SPY. So the picture here for the SPY hasn't really changed. We're still in the downtrend below declining moving averages, but there is a base that is forming, which you can see on the screen right now. And you have about 14 days or 2 weeks of basing candles. Now, the problem here is that this is kind of loose per se, but it's still a base and it still needs to be respected. Now, if we do get above this on Monday, there could be some sort of rally, possibly to the 50 or these declining moving averages. I would say possibly around 673 would be a good area, or just in that area in general. So I'm not saying that this is definitive or anything like that. There's just a probability that that's probably going to happen as the 50 SMA catches up here. Now, what I would personally want to see is to get above all of these moving averages and then make a higher low and then, blast off from there. But the way that things are looking right now, we closed below the 200 and we are pretty much right below it with a 21 in your sight. So really nothing to do. I know that there's still a lot of work to do in the markets, but if you want to sit in cash, that's probably the best thing you can do, as there's really very selective areas in the market that you can play. And on top of that, having a VIX that's pretty elevated still, I still wouldn't want to be taking positions overnight because of the gap down risk. As you can see, like even today or yesterday on Thursday, where you get above and then the next day it gaps down, opens up and reverses. Like those are areas where, yeah, if you're taking like a pretty hefty position, 20-25%, that can actually destroy your account if you get stopped out, because that goes way beyond your risk. And then a couple of those definitely will mentally get you. So just FYI. In terms of the RSP, same thing here, same picture here. Have a little bit of a base. This is actually better looking picture in terms of the RSP. Still, we closed below the 200, reclaimed it, and then, basically tested off of here. We could get a base into the 200 level or the 50 SMA. But as of right now, still really nothing to do. You can take the trade if you really want to. That's your strategy. But for me right now, I would want to see a higher low after you're breaking this. Like literally come up, come back down, test it for a little bit, and break back up, and then test again. So like that's kind of like what I'm looking at. But again, not looking forward to doing anything much in the market. The QQQ, same thing, same story. We're getting there. There is a base right here, as you can see. I mean, obviously, you want to get above this area right here because this is like a reclaim at this level. But again, we're below moving averages. I'm going to stay away from that. QQQ, same thing. Still a little bit of a base right here, but this picture has not changed at all. In my opinion, I think this is still weak. So definitely not deploying any capital. IWM looking good. Broke down of the 200, reclaimed it, and has a little bit of base. Can go up to the 50 SMA, which is 257. And then we still have this longer term trend line. So if I were to extend that out, it's possible that we just even go to the 50 or to the red line here, and then we'll see what happens from there. MDY, really nice base right here. Probably like a 3 week base, which is really nice. But again, these are all short-term moves. If you are a shorter-term swing trader, right, meaning that you hold for like a couple days, this is the best environment for you or not the best environment for you, but this is the best pitch for you because now you're actually getting confirmation in terms of like if you do break out on Monday, you have some things that you can do. However, if your goal is to hold for months, right, 2 or 3 months at a time, if you're swing trading or anything like that, this is a very hard market because not everything will stick, right? So if you look at like something like Exxon, which something as I missed, right? I got stopped out here multiple times. This move right here, right, is about 2.7 months. This is the type of swing trading environment move or swing trading move I would want, because I want to do less in the market. I want the market to literally take me right on the wave and like go somewhere. But majority of the time, with the majority of the moves that we're getting right now, they're not doing that. So my job is to sit in cash until we get better environment, and then when it comes time to strike, then I deploy all the capital I can. But for now, there's really nothing else to do. For the VIX right now, we're going below to the possibly to the 50 right here. I've been saying this. We're still above key moving averages on volatility here. Okay. Nothing. I mean, not saying that we can't go lower. We definitely can go lower, and that would be great if we went lower. And then, but honestly, with how everything is, this picture has not changed. There's the VIX is still elevated. It can still get more elevated, right? Um, when I'm looking at the weekly, like it's an inside bar, meaning that we don't know what the direction of this move is going to be with volatility, right? So you're kind of like testing areas here where like you're testing the top of this range, but is it possible that this can go back up, right? It's possible, definitely possible. The thing is that if it does, a lot of people will get caught. Um, and I think that risk right now is more important. Risk management is really more important. And I just want to reiterate or reinforce this that being a trader also means that you can stay in cash. You don't have to take all the trades in the fucking world. That's the one thing I think people don't realize. And it took me a while to realize this is that, you know, as a trader, when you put yourself in that identity, there's something in there that makes you want to take trades all the time. That makes you and forces you to take trades because you are a per se trader, right? Because that's your only thing that you should be doing. And then you kind of fuck things up because you think that everything needs to be done right now. Every single setup needs to be played. Then, because your job is to make money. But sometimes it's the difference between, oh, I'm gonna turn this 300-pound patient by myself versus, oh, I should wait for the right environment and wait for like 4 or 5 people so then they can hold them up and I can actually clean this fucking patient by myself. That is kind of like the analogy that I'm giving right now. If I don't have those, majority of people, I know even in healthcare, if you had a 300, 400-pound patient, you ain't gonna clean that motherfucker by yourself. You are definitely gonna wait for everybody else to come in there and be like, "Hey, yeah, we gotta clean this patient. Thank you for coming through." But I know a majority of people definitely ain't gonna touch that patient and be like, "Nah, that ain't worth my back." But that's the way you gotta think of it when it comes down to trading, is that there is a optimal working environment that you need to make money. And that is the way is to wait for the best environment. So, anyways, I kind of ranted there, but that's my 2 cents on everything. Hope you guys take care and peace.